Oh, wait. Wait for us to get up to about like a few more people before we get started. So, welcome everyone. If you want to introduce yourselves in the chat, please do. We're so really excited that you're here. Can drop your name, where you're from, what your business is. See a couple raised hands. I don't know if those are. Hey.
It says chat's disabled.
Oh, it says chat's disabled. Okay, let me see what's going on. Oh, um, okay, that should be working now. Thank you. Now that the chat's working, drop your name, where you're from, your business, then we'll get started in just a couple minutes. All right. LA, San Diego, Tennessee. Love it. Coast to coast. That's awesome. DC, Pennsylvania. Nice. North Carolina. Carolyn's from North Carolina. All right. Well, we'll get started. So, thank you all for joining. We're really excited that you're here we're here to talk about all things tax. We get a lot of questions about taxes throughout the year, but NAV is really focused a lot more on business credit. Thankfully, we have friends who are great at taxes. So that's why we have Talibah and Carolyn here with us today, and Jen as well, our head of customer insights, who's going to be helping lead the discussion. So we're going to cover all things, the basics of tax. This isn't financial advice, but it's just designed to give you a little bit of education and pointers so that you can go into tax season with confidence and ask the right questions from the experts that you hire or choose not to hire. So we'll go through the basics about like deadlines, taxes by business entity, when to do your own taxes versus when to hire someone, and the link between funding and paying taxes. And we have a few other things teed up as well. Throughout this session, feel free to drop any questions you have either in Q&A or the chat. We will be monitoring both. And we will have an open floor at the end to go over questions. But if a panelist is talking through something and you want to dig a little deeper, we will keep an eye on everything and we can bring you in. So with that, I'm going to hand it off to Talibah to introduce herself.
All right. Well, I think it's officially evening time. Good evening, everyone. I am Talibah Bayles. I saw business owners say they were from Birmingham. So I am also, my firm is located in Birmingham, Alabama, and that firm is TNB Tax and Financial Services. As can be implied in my business's name, I help small business owners in all things taxes, tax strategy. We do QuickBooks work, other bookkeeping and accounting work. And I've been a NAV cheerleader for a while. So it's exciting to finally do a collaboration where we are providing you with all the financial tools you need to have a successful tax season.
So glad you're here. Carolyn, do you want to introduce yourself?
Hello, everyone. I'm so happy to be here, and thank you, ladies, for the invitation. That I appreciate. I just want to say hello to everyone, and to give a specific shout out to those of you from North Carolina, which is where I am. I am in Greensboro, North Carolina, which is pretty much the middle of the state. My company is Financial Solutions Accounting and Tax, and we've been in business since 2002. And the specialty for us is small businesses. Love small businesses, think it's just a wonderful thing to be self-employed, and to have a B plan in life. And I see that as entrepreneurship and looking to do your own thing. So again, we specialize in doing individual returns. We do a lot of individual returns, but we do lots of business returns as well, LLCs, partnerships, S corps. And we do some bookkeeping and payroll, but for clients only. So that's who we are. And again, I'm so glad to be here, and we look forward to hearing your questions.
Hello, everybody. I am Jen Wolf, and I am the head of customer insights here at NAV. If you have participated in research before, you've probably talked to me. So hopefully some of you are coming back. I'm honored to be here today to talk to Carolyn and Talibah and ask them some of these burning questions that we all have about how to have a healthy tax season. So really looking forward to this conversation.
Right. So first, we just want to ask, what's your top tax question? If you could leave it in the chat, we'll just make sure that we get to it. And if not, we do have some topics teed up. We'll just let that run. I'm sure that there's some lengthy ones.
As they put stuff in the chat, I'm curious who all has already filed taxes, or is everyone is everyone on the call with a burning question because they're ready to file taxes? That's always really cool to know as well.
Some new ones filed, claiming losses, filing an extension. Okay, great. These are great questions. New to taxes. Awesome. Well, you're in the right place. We're going to definitely cover all of the basics. All right, we're definitely going to cover filing as an LLC. So these are great. Jen, do you want to kick us off?
Absolutely. It looks like we have quite a few of you in the chat who are new to this. So we are going to start off on kind of like that ground level. Talibah, my first question is going to be for you. Can you talk a little bit about kind of like the basics of taxes, right, for small business owners? Like what kind of deadlines should they be worried about? What kind of paperwork do they need to have together? How would you suggest they get started?
Really great question. And I see a couple of chat questions that are around deadlines under the same umbrella. I think, and I know Carolyn would agree, we probably all have one word that comes to our mind when we think of taxes, and that's probably, no, or like anxiety, or oh my God, help. All of the things that anxiety that come along with the responsibility of filing taxes as a taxpayer. And then when you add on as a self-employed taxpayer, sometimes it can seem daunting, but I do recommend starting with the basics of deadlines, because of course, if you don't know the deadlines, the IRS as well as your state entities will tack on penalties. Which kind of adds to any sort of negative feelings that you may be dreading. So first and foremost, let's talk about the one that is most applicable to all of us, and that's the deadline for individual taxes. And so everyone knows that's usually the one everybody knows, right? You can put that in the chat, see who gets that correct. But if you were thinking April the 15th, then you are correct. That's generally the day that taxes for individual taxpayers, your personal packet, I like to say, is due. Now, sometimes it could be like on the 17th or the 18th if there is an observed holiday in DC, the District of Columbia, then that's when you'll typically see a few days following the 15th. But if you remember April the 15th, that is the most common tax deadline, again, for our personal taxes. Now I want to, without giving way to some of the questions I know that we have prepared to answer a little bit further on, but how you file is linked to a deadline as well. And so I know that Carolyn and I will touch on this a little bit more, but if you are an LLC, so a single member LLC or a sole proprietor, you have not taken the steps to register your business officially with your state entity, then you're filing in that personal packet that I mentioned, right? So that April 15th is your deadline. However, there are some LLCs who have opted to file as an S corp, which we will talk about as well. And I think it might have been Shantae that had that question in the chat. So if you are filing as a subchapter S corporation or a multi-member LLC partnership, your deadline is March the 15th. So if you recognize that pattern, that's a full 30 days before the main deadline that I just spoke of. And I like to share that and point that out because most folks are like, dang, why isn't everything on the same day? Help me, make all this make sense. Well, the reason why you have 30 days before you have an earlier deadline is because how you're filing those taxes has to be distributed to your officers, your shareholders, the other owners. And so you want to make sure that whatever your business is reporting for those stakeholders, that they have ample enough time to file their personal taxes. So that's why March the 15th is the deadline for subchapter corporations and partnerships. And that kind of help you understand the responsibility of getting that deadline knocked out so that you can file everyone can file in time. If you're a corporation, then your deadline is going to be April the 15th. Okay, so it is a pattern. And I think we have a handout that we'll be sharing with you as well if you're kind of scrambling trying to write all this down. And then finally, nonprofits, if your calendar year, hold on, I'm not going to lie, I'm a transparent person. All these things should be in my brain, but I would much rather look at it and not tell you the wrong thing. So if your fiscal year ends September 30th, February the 17th, and if it is a calendar year, so December 31st, it is May the 15th. All these deadlines, I tell you, I got to have them written down too, so don't feel bad.
Yeah, there's a lot of dates to remember here on top
Yeah.
of everything else. So thank you, Talibah, for clearing that up. What kind of paperwork should people be preparing for, when they're looking to file as a business?
For me too. That's for me also.
If you want to start, and then we'll see if Carolyn has some follow-up to that.
So the biggest piece, and I think we're still kind of at that time where I like to advise tax filers to make sure that they have everything. And so we know that the end of January was when all companies, all mortgage companies, all W-2 employers, everyone had to have their copy of your 1099s, your W-2s, your mortgage interest statements. If you have stocks, all of that stuff was due to the IRS January 31st. And so I like to say, if you're a homeowner, if you know you had investments, if you know that you were a contractor, anything that would generate a tax document, make sure that you have that for sure before you file. And that's stuff that the IRS is going to get a copy of due to however your relationship was with that organization. Then, of course, there's the standard receipts and you keeping track of your own business data, which we'll get into a little bit more. But the most important things I like to say are the things that there is a bona fide paper trail on because it has been sent to the IRS. Because the IRS is, once they have a copy of your W-2, once they have a copy of your mortgage interest statement, your 1099s, then they are going to be expecting that your tax return include that information.
Thank you, Talibah. That's helpful. Carolyn, did you have anything else that you would add to that, like from a basics perspective of how you can prepare?
Yes, I do agree and appreciate everything that Talibah mentioned, but there are a couple of things I wanted to add to that. Um, Being organized is a big part of all of this, and we'll talk a little bit about that a little later. But oftentimes, when we get these tax documents, we may lay them down in one place versus another, and then when it comes to getting the taxes done, we can't find things. So I like to suggest to people that have a place, have a folder, a file cabinet, somewhere where you're dropping all of your tax documents. And then that way, when it becomes time to either pull things together, organize, and get it ready for tax prep, you have everything you need. Um, with that said, also, I am a big proponent for checklists. And I say this because oftentimes we run in to get taxes done and we forget things. And even though we may be putting official tax documents in the folder, there are some things that we have to gather along the way. And so get a tax preparation checklist. We have one on the website that I recommend all my clients go out there and take a look and see what you need to bring. Things change every year, but you know your situation. And then I also recommend some people creating your own checklist. What's specific for you? And having that you can move forward every year so that you have your own list of the things that are relative, because a standard checklist is great, but many taxpayers don't have the same situation. And if you don't, you may have specific things that you need to gather to help in getting taxes done, getting them filed, not just on time, but accurately, because unfortunately, if you leave things, as much as we may have a checklist and ask you things, there may be times when you just simply don't remember. And so that impacts your bottom line as well. And so preparing a return as accurately as possible is most definitely something that we need to do. So that would be some of the things that I'd like to add to that component, is just to have your list of what you need and to be organized so that you can help your tax person do the best work for you.
That's excellent advice, trying to maximize that investment in your tax person there. Carolyn, I'm going to stay with you for a minute. You mentioned differences, that people can experience when they're filing taxes. Can you talk a little bit about the differences by business entity, right? Like the differences between LLC and S Corp and the different entity filings?
Yeah, so of course, the sole proprietorship is pretty much the most basic entity there is, where your social security number is your identifying ID number. And, when it comes to getting started, the IRS just wants income reported. How that gets reported and what entity you have is another level. But they're very interested in you reporting income. So if you're a sole proprietor, even if you haven't gotten a business name yet, I always recommend that those should not be things that stop you from getting things done, because you can come up with a business name, but if you're a sole proprietor, you are the business. Your social security number is your identifying ID, unless for whatever reason, maybe as a sole proprietorship, you may have employees, then you may want to apply for an EIN. But that EIN is definitely tied to that entity, which would be a sole proprietorship that files pretty much, and we're talking about basic tax returns, not estates and trusts and all that, 1040 in your state. So that would be the start. That's the most basic entity there is. And actually, it's one of the easiest ones to operate, because there are not as many rules regulating what you do. So it is a rule of thumb. You're trying to figure it out, and you don't have everything in place yet. It's really an easy way to manage your business. Now, the next one after that, I'd like to talk a little bit about the LLCs and the partnerships. And then, of course, the S Corps, and then you have the C Corps. But most small businesses stay within the realm of sole proprietorships or LLCs, and then some partnerships and S Corps. LLCs, and it has become very popular in the past few years. And it's a good thing, because what it does is it steps us a level above sole proprietorship and gives us, I would say, some protection from liability, which is why it's called limited liability company. And that's great as well. Another entity that's easier to operate, not as simple as the sole proprietorship, because there are rules regulating LLCs as well. And so you would want to know those things before you make a decision on which entity you're going to choose, because they do vary. And knowing the rules for each one helps you decide which entity would work for you. And then the partnerships, you know, many partnerships are LLCs. And the thing is with these two, well, with the let me back up. The LLC pretty much works its way out on a 1040 if you're a single member LLC. Okay, that is the default. If it's just one person in your LLC, you are what the IRS calls a disregarded entity. And a disregarded entity to them looks like a sole proprietor for tax purposes, which means you'll be filing a Schedule C. Okay, so just know that that's what a single member LLC is. The minute you take on a partner for whatever reason, not necessarily your spouse, but a partner to run your LLC or to be a part of this for whatever reason, investments could be one of the reasons you're trying to raise capital. That now becomes a partnership. An LLC that has more than one person by default is a partnership to the Internal Revenue. Okay, and so just know that now you're outside of the realm of the 1040 return. You are now in the realm of a Form 1065, which is the return for partnerships. And there are rules governing that as well. There are rules governing partners and how they operate and all of those things. So you want to be aware of those things as you choose. And again, it's a 1065. It's a different form. So now what we're kind of getting into now is the next entity that I want to talk to you about, which is an S corp, because a partnership is a pass-through entity, which means the activities of the partnership passes through to your personal return and gets reported on 1040. Okay. An S corp is also considered a pass-through entity. It is separate though from the owner of the company. It is a corporation. It stands on its own. It's got its own tax ID and all of those things. It's got shareholders, but it also passes through. The net passes through to your personal tax return on what is called a K1, just like the partnership. It's passed through to your personal return on a K1. And different rules governing a partnership versus an S corp. Limitations on how many shareholders you can have on an S corp. The filing deadlines oftentimes, is a part of this whole thing as well. And the thing with an S corp that many people appreciate is that you're not subject to self-employment tax like you are in a sole proprietorship, single member LLC, and a partnership. Okay, so what does that mean? That means that if you are an S corp, you are the shareholder and you're paying yourself from the business, you really should be set up on payroll so that your federal taxes, withholding, and FICA can be taken out of your pay. And so now you are an employee of the company, even though you're a shareholder, you're still an employee. And so because the company is taking taxes out and matching your FICA, that is where your taxes play out as far as your self-employment tax. Mm-hmm. Okay. And the result of all of that then passes through to your personal. And so you're paying taxes on your personal return through the S corp, but what you're not paying is Social Security and FICA, because that's already handled as an employee. And so now you're just subjected to federal tax. And for those who live in a state where there is tax, you're subjected to state tax. So in a nutshell, those are all the differences between, the various entities. And, they're taxed based on the individual circumstance, okay? Because your individual tax rate now plays into that. And what does that mean? Well, your tax rate is based on a lot of things. It's based not only on your income from your entity, but do you have W-2 income? Do you have investment income? Do you have other things going on that now impacts your tax rate? So that's something key to keep in mind as well, is that that's going to vary depending on the type of entity you are. And then the last one I want to just talk to very quickly, because many small businesses are not C Corps, okay? You have your big corporations that are C Corps, and that is a different type of entity. The rules for that, totally different from the pass-through entities. And the other thing with that is the corporations pay their own taxes. So in other words, the tax return is filed If there is a tax liability, the corporation is paying that through the corporate return. It's not passed through the personal. And some of you may have heard of the term double taxation, and that's where it comes in, because some people are like, well, the corporation's getting taxed, but then if you work for the corporation, you're getting taxed too. So just know that those are some of the lingo and some of the jargon that's associated with all of these entities. But I would like to definitely suggest that you know as much as you need to know about your entity and what is required, because at the end of the day, you pretty much can't excuse that. The IRS is going to hold you accountable for the entity you have, and no longer can you say, well, I didn't know. That doesn't fly in this day and time. We have to know. And if you don't know, seek a professional who does know, especially if you're in the business of doing things yourself, which we'll talk a little bit more about that.
Absolutely. So, Carolyn, there's a follow-up question in the chat. Talibah, feel free to jump in on this too. If they are being taxed by the IRS as a sole prop, but they're actually a partnership, how do they rectify that situation? What should you do?
Okay, so in cases like that, it has a lot to do with how you filed for your tax ID number, because the IRS will give you what you've probably heard of, which is a determination letter that tells you, okay, so you filed for your EIN, you put on there that you're in, I'm going to make this up, you put on there that you're an LLC. And you didn't put anything else. You put, Jane Doe is the person. Well, the IRS is going to think, okay, and they're going to send you a letter saying you should be filing Schedule C because you're a single member LLC. If you have a partner and you really are a partnership, well, that's a whole different situation, because now the IRS is expecting a Form 1065. And so where I've seen the problem is that people forget what entity they are, or they may have asked for something that they really didn't intend. And so unfortunately, once the notices start, they will forever be sent until you contact the IRS and rectify that, hey, I know I submitted that paperwork and I asked to be an LLC and I gave a couple of names, but that was a mistake. I intended for this to be a single member LLC. There is no one else in the business, and we can change that. And oftentimes I've found that when you have a tax ID for an LLC or a partnership, the IRS won't necessarily ask you to get a new EIN. But you have to at least touch base with them, because they don't know what we're doing on this end. They've sent you what you requested, and they have no idea that your circumstance is not what was on that sheet. So it's something that you're going to have to definitely contact them, because if you don't, you will continue to get the notices. They will continue to feel like, oh, we have you down as a partnership. Why haven't you filed Form 1065? Because even though you might have filed a 1040, they're looking for a 1065. So you might have filed and thought you were one thing, and it's like, uh-oh, I'm something else. Well, they now are tagging you because now the return wasn't filed. It's officially late because you filed a 1040, you didn't file the right form. It's officially late. And so now you've got penalties and interest for late filing. And so a lot of it is about communication. If you're getting those notices, or you think you've done something questionable, make a phone call and try your best to get things straight, and look to see if the IRS will send you any correspondence that will let you know, hey, this is the deal, let's move forward. So that would be my thought on that.
That's wonderful. Don't wait. Rectify as soon as you notice. And Talibah, I wanted to go to you next. Like, now that we've talked about the entity types and how those taxes differ and what to do and if you've filed incorrectly, let's talk a little bit about the sole props. When should a sole prop consider incorporating?
Yeah, I so much went through my mind in listening to the guidance from Carolyn, because it's really so valuable, and I know that it's all overwhelming, right? Because it can be very difficult and murky to go through. But I think the thing that I want to point out in getting into that, and I promise you it's the answer to when to incorporate, and I think that's why this partnership with NAV is so vital. I want you all to think about taxes as, yes, I have to get it right because I have to do it. So if this is this thing that I have to do because the IRS is expecting me to do this, then how can I leverage this and make this work for me? If it's a rule I gotta follow, I want to follow it in all the right ways for me and for the fact that I have to do it. And so typically when I'm working with business owners who are sole proprietors and they have not established a business, that's the type of things that we're thinking of. So some of the things we'll talk about is, do you have any desire to get a loan to get somebody else's money? Right. And so most business owners are not only trying to be profitable, but there may be at some point in your business where you desire to seek a loan or really even these days apply for grants or seek investors. And so if that is the road that you ultimately want to go down, you do want to consider beginning to separate yourself from your business. And so when you're a sole proprietor, you're your social, which is Carolyn said, your tax packet is in your social security number, your Schedule C social security number. And that works up to a certain point. But so in the instance of you're on NAV's app and NAV has all these great funding opportunities, then any funding opportunity that you are desiring to apply for is going to be in your social. So if you were to say, hey, Talibah, Carolyn, I am going to start a business because I want to start building business credit. I want to start applying for loans under my business's name. Well, now you have incentive to actually create an LLC with your state, because again, you want to begin that journey of separating your social from your EIN, not only just for funding purposes, but also on those tax forms that Carolyn just called out that are going to be different. And so that is the incentive, or that is how we make this thing fun and worthwhile to understand and to lock down, because there absolutely are incentives for doing this. And it's not just about, hey, let me keep all these receipts, Laura, because I got to file my taxes. Well, it's keeping the receipts because now you're looking at this as, hey, I'm going to file my tax return. This tax return may be something that investors are looking at to see my business's performance, or that a lender is looking at to see my business performance. And I want to make sure that I've captured all of my revenue. I want to make sure that I've captured all of my expenses so that my tax return is accurate, so that my financial statements are accurate, because that is how you are going to attract, again, investors or find lending opportunities or find grant opportunities. So I think, we are now kind of there, like in the webinar where, we gave you those basics, we gave you those things, that the checklist, the black and whites, but now it's like, okay, so what is going to be working best for me as I try to grow and try to scale my business in the area of business credit and business financing and things of that nature.
That's excellent, Talibah. As you're talking, you're talking about all these incentives and that you don't want to miss, and all of this kind of like personalization, that's like required for you.
Mm-hmm.
That makes me think, when do we look for help? So to the two of you, when is it best to hire someone? When is it best to bring in a tax professional to help you?
There was one thing I wanted to add on to what Talibah just.
Sure, absolutely.
Is that okay?
Yeah, absolutely.
I thought about this as she was talking, and I was trying to make some notes so I could hopefully add value to what she said and not repeat. But the other thing that I wanted to contribute as far as when it's time to move from one entity to the other is, a big thing for me is liability. What are your exposures? Okay, because maybe you started a daycare as a sole proprietorship, but now you have people's children in your home. And we know what that means. Okay. It could mean anything from soup to nuts. So now your exposures are increased, especially if it's not just one child, you've got a bunch of children. So I always think of what are my exposures? What are my liabilities? And how will my entity structure help me with that? Because that is why these entities exist.
Right.
LLCs versus sole proprietorship, and then move into an S corp. Now, the one thing I also want to put out as far as transitioning is this: when you're a sole proprietorship, pretty much your income expenses, there it is. You take money out of the business when you feel like it, as long as hey, look, you're going to be taxed on your bottom line. It doesn't matter if you take it all or burn it. You're going to be taxed on that. So you just have to know, what is my net income, because that's going to be my taxable income. The thing that makes it sometimes difficult when we're trying to get loans, trying to get funding, trying to look good to the bank is, how can I be validated on paper? And one of the biggest challenges with getting loans, getting funding, is that many financial institutions want to know, well, how do I know you didn't make these numbers up on your tax return because you won't look good for the bank? Well, when you are an S corp, that is also a pass-through entity. But what is happening there is, if you are a shareholder and you own the company, you should be getting a paycheck, a W-2. And so guess what? That helps validate you, because now for funding and for loans, it's not as many things required to validate you, because they see you're getting a W-2 from ABC company. That W-2 reports all the income you made for the year. Talibah mentioned it before. The IRS has a copy of all of these things. So now a funder, financial institution might be a little more comfortable in moving forward with you, because now you have a means to show them that I have a business. This is how much I bring in. It's been validated. And yes, I can be good stewards of the funds that I'm borrowing. I can repay a loan because I'm showing by W-2 that I have steady income. And there's a little bit of a different dynamic there, because oftentimes as a sole proprietorship, you know what, you may still pay yourself a certain amount every month. And I tell people in those cases, document what you're paying yourself each month as a sole proprietorship. If you're taking $1,000 every month, document that every month I take $1,000 at the end of the month, and write that up, because that also can show, even though you don't have a W-2, that you are consistently receiving income to do whatever you're doing. And then, of course, they look at things like your total taxable income. Did you have a loss? Did you have net income? So yeah, those would be my two big things: is, are you on the payroll process with a W-2? Now, let me throw this in with a corporate, with an S corp. Payroll is a beast all its own. Okay, because now you have to file quarterly payroll tax returns, you have to do withholding, you have to pay the federal government monies that you've collected in withholding and FICA. You have to turn that over every month, and then you have to do W-2s at the end of the year. That is daunting for many people. So now, how do you manage that process? Do you use a payroll company? Can you seek someone? Does your tax person do payroll? Because that's something you're definitely going to need help with if it's not your skill set. But yeah, I wanted to add that to what Talibah mentioned, because validating yourself for funding is critical, and you need to be able to do that and do it well, no matter what entity it is. You need to be able to show your funder, your loan company, your people who are giving grants. They also want to see what you're doing. Just because it's free money doesn't necessarily mean caution to the wind. They still want to know, we're giving you this money, but we want to make sure that you're exercising due diligence and that you will be good stewards of the grant money. Even though you may not be in business 10 years from now, when they give you grants, they're looking at one thing. Do you on paper or whatever, do you appear to be someone who will be in business? Will you be able to not only start this business, but can you sustain it over time? Because if they feel like you cannot, rhetorical question, why should they fund? Okay, why should they give grants when there might be someone else that they may see is, hey, this person, solid business plan, solid things going on, that we feel like, yes, if we give them this grant, free money of 10 grand, it's going to be well spent. And they're not as concerned with, oh my goodness, it didn't go as we planned. Well, that's life. Things don't always go as we planned. But the whole thing is making yourself look as good as you can for these processes, especially when it comes to loans and things like that.
Yeah, I think that's an excellent point. Like the link between taxes and funding. A lot of the customers of NAV, a lot of our small business owners are in the process of building credit, to access financing. So knowing that your taxes have implications on that as well and can help you in that validation process is a really important piece that I just wanted to highlight there.
Definitely. And we need to put a couple of exclamation points behind that too,
Yeah.
because no one really tells a business owner that like the pieces don't come together until you've been denied. That it's like, oh, well, wait a minute. I was trying to write all my stuff off, so I did owe taxes. And it's like, congratulations, now you don't qualify for a loan. So that's definitely something that we, if you don't remember anything that we talk about tonight, if there's at any point, I would say, within, to give you some specifics, if you're trying to get a loan from a traditional lender, traditional meaning I like to call them your big box brands, your Bank of America, your Wells Fargo, your Renaissance banks, then they are going to look for 2 to 3 years of tax returns. Now, NAV, because I've worked with NAV's platform to get business owners funded, NAV has some lenders who will ask for bank statements. They may not be as heavy on the tax returns because they work with a fintech or things of that nature. So when you're in the business of lending, you want to talk to your tax professional, your CPA, your tax strategist. You want to also talk to someone who is accustomed to working with business owners on getting financed, and who actually does business taxes. And I have to emphasize that as well. I'm sure Carolyn probably is like, yes, because, just because someone does taxes does not mean that they are tax strategists and that they know how to work with business owners to understand the process of the link between your taxes, your financial statements, and that loan application. There's a couple other things that have come out in the chat while we've been talking that I want to make sure that I clarify. There's a couple of questions about PLLC and LLC. So P usually comes in if you're a dentist, if you have a certain licensure degree that requires that professional before the LLC, you're still an LLC. And in fact, which I'll get to next, you could still file that company as an S Corp. So I want to talk about S Corp in a little bit. So PLLC just means that, because I have a client who's a dentist, we have to do a PLLC. A certain state may require a certain industry with the licensure to have that. But your legal entity is an LLC. It's just either you have that professional licensure or it's just required by your state. But a partnership, which is what Carolyn was explaining, is when there's more than one member of that LLC. So then you're automatically a partnership, which is also an LLC. But, I saw that and I was like, you know what, those are really good questions to distinguish. So I wanted to make sure that I distinguished that. So now I want to get into the S Corp piece. So an S Corp is actually a tax filing status. So I think I want to add some meat to what we're talking about on that as well. Your legal entity with your state, and here's some crazy stuff, right? So you could be an LLC or you could even be a C Corp, right? And still file as an S Corp. And you guys get a bonus because I actually am a C Corp. My firm is a C Corp for a number of different reasons that I know we probably don't have time for this evening. But you have a bonus in the sense that that I am one of those crazy people that signed up to be double taxed. But anyway, so the S Corp piece is a tax filing status, which means you have to apply to the IRS. You have to request this status from the IRS. It is totally a free process. And so the rules to that, I typically advise if you're creating your business, just go ahead and do it under the same checklist that you're filling out your paperwork with the state, and just do it, right? I know there's tons of conversations as to when is it the appropriate time, what dollar amount is that for us to say we're ready to be an S Corp. Again, I'll be talking all night on that, but I'll just say if you're starting your business, go ahead and request it then. But if you have already started your business, you've heard people say all this stuff about S Corp, and you're like, what in the heck, does that mean? How do I do this? then the IRS actually gives you 3 years and 75 days from the date of formation at your state level. Because someone had a question in the chat and that's the reason why I remember to call this out. So that's 3 years and 75 days from your original date of formation at the state level is the length of time that the IRS will give you for what they call a late subchapter election. Okay. And this comes into play after you've talked to Carolyn or I or another tax professional who has advised that, hey, yeah, this is something that you should consider doing. And it is a form that you fill out. And again, you request it from the IRS. So if you're within that 3 years and 75 days, again, from the date of formation at the state level, and something that we have said is like burning in your spirit now, then you definitely want to make sure you follow up so that we can look at your particular situation and see if that's a right fit for you. But because we're talking about tax strategy, you heard Carolyn say it does most immediately. You do bypass self-employment tax because ultimately the IRS expects for you to be on payroll, okay, the reasonable salary. One of the things that also was in the chat was, hey, my business is not profitable. How am I going to pay myself? Well, if your business is not profitable, the IRS, you can't pull money out of the air, right? So there are some things where if your business is not profitable, then then there isn't anything to pay yourself. But when you start reporting profit, then obviously the IRS is going to be that time that TikTok starts ticking because, there is that expectation as an S corp that your officers and owners will ultimately be on payroll. And so that P word, like, don't be afraid of it though, because just as Carolyn said, how empowering is it that your business gives yourself that W-2? And guess what? Here's the secret. If you don't have the money in the account, then you don't have to pay yourself. So, which is why you work with a professional on payroll. You can absolutely have a payroll plan with some of the popular payroll companies, but you want to make sure that you're signing up knowing that you can have control over what you pay yourself. Like, because some people get intimidated. They're like, okay, so I said my salary is 75,000 and my contract got canceled with everything going on. Lord, how am I going to pay myself? You pay yourself what you can when you can, and there are absolutely payroll plans out there to allow you to do that. So I do want to speak to that. I know I probably went off script a little bit, but I just saw a couple of good questions and I just wanted to make sure that I spoke to that.
No, Talibah, that was amazing. And those are exactly the questions that we were going to bring up to you next. I think you made some really critical points there. We do have some other questions from the chat that we wanted to bring to the two of you. The next one that came up is claiming losses. So could one of you talk a little bit about the process of claiming losses?
Okay, so I'd like to at least start that off and would love to hear Talibah's thoughts on this. And as she was talking, again, I was jotting down notes. I was like, oh, yeah. She just mentioned this whole situation of losses, okay? And she also brought in another word, which is key in when you're assessing what your business is doing, strategy. Okay, so now we're not talking about just somebody, you take the paper and they do your tax return and that's it. And most of us in this business that are helping small businesses, we're not just preparing a return. We're looking at your operations and giving you suggestions of things you can do, especially if I am seeing losses year after year after year after year. And so with that said, what are you worried about? What are you concerned about? What are we doing? So now with losses, hey, it happens. It happens, especially at ramp up time. If you're a new business, chances are the first couple of years, unless you've been planning for it for years, you're going to suffer losses and for various reasons. And that might be okay. But the thing you want to think about is, okay, are you paying attention to your business? Are you seeking someone who can help you determine strategically what needs to happen? Because if you can, and it happens again, losses happen for many years. But the thing the IRS looks at, and I will just bring this up very briefly and then step out because this is a conversation all its own. But might it be a hobby? And those are the questions that the IRS is going to ask. Are you in this for producing income and making this business go? What activities are you engaged in to show that you really are trying to have money come in the business? What are you doing? Are you advertising? Are you doing this? Are you doing that? You know, you're trying to fund your business. What are you doing to show the IRS that this is not a hobby? Because hobbies have rules guiding them. And pretty much you can't write everything off when this is a hobby. Okay, hobby losses are pretty much cut off at hobby income, pretty much. Okay, expenses for you pulling $100 or you spend 100, well, that's a wash. And that's a little bit different when you're in this to win this, to be a business. Is now you can, the losses you have can now go to reduce maybe other income that you have going on, like W-2 income. You know, you may have some investment income, but again, everything has rules because even with losses, you know, you're coming into now rental real estate, residential rental, passive activity losses. You know, how much of that can you write off if you're not a realtor? You know, so again, pay attention to the rules of the entity that you're choosing. And Talibah made mention of this before about those losses. During COVID, there was a lot of free money being distributed to small businesses to help give them that boost that they needed. It was great. But the thing that many people had challenges with as small business owners was for years they suffered losses. And oftentimes this free money, this grant money that was being given was based on the premise that you had net income, not a net loss. And so now, hey, strategy, how is that affecting me? Well, a person can't qualify for those grants because you've been showing losses for the past 5 years. It's great to have losses because it helps reduce your taxable income. But if you're in a business that you want to work well and grow, and you're looking for funding, you're looking for other things to help you strategically get to that level, you want to consider these things, okay? Very serious things to consider because strategy is key. Are you paying attention to your expenses? Are you spending more on supplies that you need to? Are you being drained by the vendors that you have that's charging you maybe not the best price? Do you need to start looking at others in the market that may be selling widgets or whatever you're buying to determine, okay, I've got to reduce expenses now because what is a loss? It implies by right that you have spent more money than you earned. And how are you getting funded? Are you getting loans? You're getting grants? Great. But you want to build your business and strategically think through things so that you are doing income earning activities. Okay, because if it's a loan, at some point you got to pay it back. If it's a grant, free money, but not as many grants available as there are loans. And loans could be at interest rates you can live with. So it's a great way to influx money into your business, but you want to watch that. And so strategy is a big part as well. We have to pay attention to those things. And a good tax pro will do just that. We'll talk to you and say, hey, you know, you've got a $14,000 loss and you had a $13,000 one the year before. And this is the other thing too that I think sometimes gets lost is that people may have a great idea and decide, I want to do this. Well, you know, you started the business off saying you were going to sell 3 things in your business. So these were going to be your 3 services, right? Products or services. Well, it's a year in or a year and a half in, and you see that maybe some of the ideas that you had are not as profitable as you thought. So now, do you need to, again, strategy, go back in and look at what you're doing. Are there some services that maybe are not performing well? Do you need to sit and think through, those are services that that's not working for us. So we may need to drop those services. And the same thing with products. If you're getting the best price, great, but can you look at some vendors in the market who are offering what you need at a price that you can work with that will help you meet your ultimate goal, because that's what that is. At the end of the day, you've got to take care of your business and make sure that those things that will help it to run smoothly, to be profitable, and to get you where you envision this business to be, we've got to pay attention to the things that we're doing from a mundane standpoint that is having an impact on the bottom line.
So we have about 5 minutes left, and I want to hit on these last couple of questions that we have from the chat. So, so this one is, if you and your spouse, excuse me, both have their individual LLCs, but both are listed on one of the LLCs, with just one as a member without a percentage of ownership. Is that considered a partnership?
One is
So,
a member without ownership.
Without a percentage of ownership, yeah.
so there might be some things that can be done to rectify the situation, which is if you're a husband and wife and your intent is really not to be a partnership, because filing that Form 1065, it is it's not easy peasy like your 1040, okay? It has guidelines and rules you have to follow. You might want to consider an LLC that engages the husband and the wife, even though they're running the business, they work it together, but you're asking the IRS for you to be a family LLC. Okay. And that's a possibility. And that's how you get over that is everything's worked out on your 1040. You look like a partnership, but because you're husband and wife, the IRS has ways that you can still accomplish the bigger goal of running your business as a husband and wife, but not really be a partnership. But it's something you have to ask the IRS to grant you. And then what would happen there? You'd have two separate Schedule Cs with all your income and expenses, everything for your joint venture split into pretty much and reported on a Schedule C.
I want to add a funding piece to that. When you're considering partnerships and ownership percentage, when it comes to financing, this is traditional loans, SBA backed loans, uh, anyone that is 21% and higher of an owner has to be listed on that loan application. And this is important for you to know, even with spouses, because you want to know, the power of the purse that your spouse, that your partner may have in the area of credit and in the area of any assets that they would be able to leverage for the funding of your business. So that's something to really consider when you're saying, okay, this person is a partner and this person owns a certain percentage of the business. It's not just on paper because their credit will come in, their assets will come in, good and bad, if it's 21% and higher. And so one of the business owners asked about, how to separate and begin to try to get financing for their business that's separate from their personal. And I'm not just saying this because NAB invited me. Like, I really honestly have tried this over a period of years working with NAB's platform on building business credit. Now, for the longest time, I can say this has been really the premier platform for understanding business credit and getting the tools for business credit. They have NAV Prime, which helps you build business credit. And all of that goes towards the pathway of beginning to separate your business financing journey. So I strongly recommend that you check out the stuff that I'm sure that Catherine and Jen are going to send when it comes to NAV. They actually, I think, are just formidable in the area of business credit and financing and being able to do that. So I'm sure that they were going to do that anyway. But I just want to tell you that it has definitely worked. It works for me. I wish I had my NAV Prime card. I would show you I have one as well. But yeah, they do have some really good tools to help you do that.
That's wonderful. And we did not tell her to say that. So that was great.
Yeah.
Ladies, I think we got through the bulk of the questions. I know we still have some more, so maybe we could take those after the fact, Catherine, and send responses. But this has been a fantastic conversation. So Catherine, I'll hand it back to you.
Yeah, this has been great. Thank you so much. I've learned so much, so I hope that everyone else has as well. We're gonna send a follow-up after this. We'll send the recording through. We'll send some of the materials that were mentioned, like the tax checklist, and a few other things. And we'll try to answer any questions that we didn't get to on the panel as well. So if there's a small delay, it's because we're doing that. So, but yeah, thank you everyone so much. And we hope this was helpful. And we'll see you next
Absolutely.
time.
Thank you all so much.
Thank you.
Thank
Have a
you.
good evening.